So last week we had a session where we broke down most of the things that happened. And for those who attended, I don't know if you guys used the opportunities that we shared during that call, because most of them worked out. We analyzed the DXY, which played very well. And we analyzed GU, and GU just did exactly what we analyzed. So it was a great week. I think there's a trade that I took and I held it. It made around 500 pips from the time that I entered. So I don't know if you guys maximize these opportunities. But anyway, uh, moving forward, let's look at what has happened today. Today I shared a setup. The confirmation came when the market had left. There was a few pips from our zone, but at least I was able to maximize it. And then I took out profit when the market hit uh, the demand zone. And I hope you guys can see my screen. So basically, this box here was supposed to be the area of entry. This box here was supposed to be the area of entry, but I didn't find an engulfing in that zone for me to enter this market. There was no engulfing, but later on, I had to wait for the market to come back to this place. Now, this place had other confluences as to why the trade would hold. And if you look closely, there's a psychological level here, 1.32500. Then we have a trend line right there. And then I used this tool also to double confirm the trade. And I found what you see, this divergency. This was a very big divergency from here to here like this. You can see this was a very big divergency, which was also an inverse of what happened here. And that's why I was looking to short the market from here. But later on, I saw right up here that the confirmations were kind of many compared to actually up there. Now, if you remember how we trade Bollinger Bands, these shark fins are always important. Once you have a shark fin, you wait for the divergency, and then you'll be able to take up setup. So that's the trade that I sent out today. You can see it bounced back here, then it again went back up here for the supply zone. And you'd have found the second entry, which seems like this was the supply zone, which seems like it would still hold. Down here, it already hit a demand zone, and the market has bounced there twice. So basically, these are so many pips in between. I don't know why my broker is displaying it in that way, but you can see that I made close to 40 pips on this trade. Yeah, 40 pips on that trade. So it was a low probability setup because the market is in a rising phase. So you don't want to be caught up in the middle of it. Now, of course, at times you can just wait on and buy the market rather than selling it for a low probability setup. For example, instead of selling it from this psychological level back to this trend line, you just wait and buy the trend line and go with it to the upside because you have so many better reasons to buy from such an area here. You're trading with the trend, there's a psychological level, close by, you have a trend line bounce, then you have a resistance which was broken and turned to support for you to buy the market. Then your confluence for confirmation is this, is it an evening or morning star? These two candlesticks here. And you can see the last candlestick is a momentum candle. That shows that buyers were stepping into the market. So if you feel it's difficult for you to identify the high probability setup or the low probability setup, what you do, just wait for the market to come. If it's an uptrend, don't look for sales. Just look for buys. Even though the market has gone so high, wait for it to come back to an area that has the conflicts and buy the market. For example, some wouldn't have to take this sell. They'll just say, no, I can't take that sell. Let me just wait for a downtrend here and take the buy back to this area, which is a very short trade. But yeah, it would work for you because it's a habit that you have to repeat in and out, in and out. You rinse, rewind, and then you get it. So the reason I'm saying this trend may be short is because there is a very huge, there's a very huge supply zone here. So I wouldn't want to be caught up when the market reaches here and touches and starts going down, which I expect to happen, something like that. You get. So I expect market to give us a retracement back to the downside, back to where the week has begun from. As you all know, hey, have I put the highs on the week? Yes, they're here. So I would say this market try to bend a little bit back down here, then maybe buy back, you know? So that's the style of approach. If you feel the market is difficult, just look for identifications that continue with that trend, you know? And I know the Fed is going to cut interest rates. I don't know when the news is, but we should all prepare for that because it's what is expected. It's very obvious. Trump wants the interest rates to be cut. And was it 2 weeks ago, last week? Last week, but one, the Fed had an indoor meeting behind closed doors to discuss, which rarely happens. They didn't wait for the FOMC meeting, you know? So you're supposed to consider all those things to hope you're trading. Now, let me see, USD JPY. I don't know what it's doing on my FPY. I think we analyzed it last week. I don't know what it's doing here. Well, I gave it as an example somewhere. Gold keeps rising rapidly. New all-time high almost every week. So you have to be careful when you're also trading gold and see that it keeps breaking above. So such a market, sells are low probability, buys are high probability. So you have to know exactly which position they're in a market, you know, because you may be there and you may not find a better sell trade because you keep getting stopped out, you know, and in such a market, psychological levels work the most because you can't look to your left because there is no price, there is no reaction on the left. It's just market movement and reactions on different price levels. Yeah. So you just have to wait a good buying zone and try to take that trade. Or lower down to lower time frame and look for structure. And yeah, you can make short-term trades in such a market, you know, rather than relying short stop loss, small risk, take the trade, done. But gold is just not for me. I would rather trade Nasdaq and of course US 30, NAS 100 than trading gold. I don't know why. I just don't trade gold. And silver is worse, you know. Silver is more volatile. It's in the middle of gold and Bitcoin. Now this is Bitcoin. This is Bitcoin. I had this analysis with someone. Was it on Sunday? I told him that we can't expect the market. Here, the first trend line was running. This was a break and retest around here. But I told him, let the market first pull back and we see what it does around here. And you can see when the market came to this zone, it bounced to back this. We had some sort of demand zone around there. You can see the demand zone is here. The momentum is here actually. So the best way, just a reminder, the best demand zones are the ones that are followed by a huge flux of market movement. For example, look for huge, where you see huge momentum, take that one. I don't know why my chart is so crowded. There's so many things. Let me just delete a few things. Makes it look messy. And I told him I'm not buying gold until it breaks above this area. Chart is so messy. This is Bitcoin, sorry. I'm not buying Bitcoin until it breaks above this area. So this trend line is longer valid. So what you want to do is zone out a little bit. If you're trying to analyze Bitcoin, you have to know that there's a lot of news driving it right now. But First, look out for structure. You can see that there is a small market flux to the upside here, moving on. And what I was telling you people that if you want to see the best demand zone or supply zone, look for a huge flux of orders, like huge momentum coming into the market. That's your demand zone, that's your supply zone. For example, you can see that here, there is huge momentum. So you take the last candle of the opposite direction and mark out this point. Now here, this one, it didn't even get to it. It didn't come back to it, you know. But I want you to remember one thing. All this is the zone, and that's the reason why we trade confluence is point A, point B. So you push it over and you get your point C in that area. So your box will be here. But you have to be, when you're trading, you have to consider that the market can still push back down here. But there are reasons as to why it can hold from here because of your Fibonacci. You know, you can see 61.8 area, so it went up. So that's the reason why you trade confluence trading. You can have 5 tools that you use that if this one is not saying this, I'll move on to this. Now here, the order block wasn't respected, so you would have to bring in another tool to see if to respect that one, you know? So that's how fast you can analyze the market. Yeah. So demand zones, supply zones, look for the huge flux of momentum. Get it 1, 2. You can consider huge candles. For example, let me just show you on another pair on the Forex side. Most of you don't trade Bitcoin, Euro USD. So someone sent me this chart a few minutes ago, and I told him, let's wait and see how it works out. And see this one played out quite well, breaker test. So what you do, you wait for the direction. Always trade with the trend. Don't be a zone trader, like how they call it. Like you buy, then you sell, then you buy, then you sell. Yet the market is going in one direction, the upside. If you're trading like you're trading a ranging market, you're going to hit stop loss. Yeah. Me, I may be trading high probability, low probability, but there are things you have to consider, you know. So I look for a large flow of income. Let's look for one on a smaller time frame. You can see like here, this is not so much, but I don't know if I can get a good example for you guys. And most times, okay, this one also wasn't respected. This one would work out. Let's go to a bigger time frame. A bigger time frame. And we scroll a little bit. I want to give you guys a good example so that you're able to find it easier. Now look at this part. There's a huge flux of money going up, huge momentum. So if I zoom in, I want to see where that move began from. Began from here, or even here. You can see this point, then you see this point. So I mark the last candle, highest and lowest point with the rectangle tool. See highest and lowest point, then I stretch it out. You can see here. Then I push it back in a little bit, just to get the highest and the lowest point of that red candle. And I stretch it out to the future. You can see the market respected that zone as your demand zone. And you remember you are in an trend, you just have to wait for this market to come back. And then you would see. Now your best entry would be after the break and the retest. This would have been your best entry. So the 15-minute time frame, to look for a confirmation for it to enter that market. And if you come here, you can look around for engulfing candles, and you can see that we have one here which is supposed to literally be a confirmation here. You know, that's supposed to be a confirmation for you to buy in the market. So always look out for, mostly if they're in your direction, like the direction you're planning to take. Buy markets go in that direction. Sell market go in that direction. Let's look at this one. There's a huge flux here, kinda. So mark out this point and this point. Then we stretch out this thing. It doesn't look good, but that's the example you get. So here, there's no confirmation literally. Like I don't see any engulfing. So people who use the three white soldiers, 1, 2, 3 would have taken it, but literally I wouldn't have. So unless there's another confluence, which I don't see, but that's how you're supposed to trade it. You know? That's how you're supposed to trade it in your direction. In your direction. So for example, Emma, someone asking me if someone if G is if EU is continuing to sell and you're looking out to draw your order book. Look at this influx. So I'd mark out here, supply zone, and wait, and just wait for it to come back here and sell. Nothing like buying, then you sell, because now you're going to get a lot of complications. But the best ones happen if the best one you'll see is if the market has a Fibonacci area there and it's looking for it. That's a sweet one, you know. You can literally just sit back and enjoy it. So let's look at the DXY. DXY. We had nice analysis on it last week. I hope you guys remember. The guys were attending. Oh, the guys watched the video. This was the DXY right here. Can see we made this analysis and nearly the market broke, retested, and boom, flew to the downside. So currently it's trying to pull back. So you have to either respect its decision and wait. So this pullback means a small buy for a small sell for GBP means a buy for the DXY. So you have to just stay in there. So which other pairs have you guys been trading? For those who felt the trading was so weak, you had no right trading any pair with USD in it. You would cross over to those countries and see what's there. You know, you'd set a separate account and cross over to those countries. Can even trade Audi JPY, GBP JPY. This one is nice. I have a friend who trades GBP JPY. It's the only pair that he trades. Let's do analysis. USD chef. I wanted to add Audi JPY, but let's start with this. USD chef. Let's see what's on this pair. So I want to first zoom out. Looks like dumping like a meme coin. Wow. It's dumping like a meme coin because of dollar weakness. Yeah. It's dumping like a meme coin. But this is a pair that I said it ranged for a very long time. But this movement is not nice. I would literally not trade such a market. Like, what's happening? Has already ever dumped. So I just have to wait for retracement. You know, look at all this. From 2023, it was just playing around here. So then boom, boom, to the downside, have to wait for retracement. And the retracement is going to take months, weeks. I'll come back in August to see what's happening there. So there's nothing there, literally. Let's cross over to GBP JPY. What's going on? Looks amazing. So I'll try to zone out a little bit. This one has no USD in it, so that's kind of clean. So I see a huge influx down here. Here. So I'm going to take my tool, my rectangle tool, and mark out this point here. Take it to the future, already leaving it. And yeah, I have my demand zone if I was trading this pair. Demand zone is there. Literally, I would be looking for buys. So I'll go to a lower time frame to get the main trend. And you can see that an uptrend is beginning and it's going to give us a chance to buy. But first, I want to get that range, the range of this wholesale by doing this. Because I don't want to be caught in the, I see the market. It can still give me a few pips to the upside, but it looks like it's also on a resistance. So I'll take that in my head and I know that around here, there may be something. So current trend is kind of high, so I want to say trend line. I want to see this small trend line. There seems to be a trend line running through. So what I'll do, I'll mark out this point, this from support to resistance point, and I'll wait for the breakout and see how the market holds up on that. Actually, I'll just wait for the breakout of that and see. So guys, are there anything you want me to talk about or you guys want to share? Market is just playing. It came back to some demand zone here. It's literally not doing that much. All this is noise. There's anything you want me to talk about? Last week was literally a good week for trading. I never analyzed this pair, Euro GBP. I rarely analyze it. Looks like GBP is gaining strength, has been gaining strength over time. Wow. Okay. I'm definitely for buy. Really can start looking for signs to buy this market. There's anything? Can I it? We'll be looking to buy this market from this zone. So you just wait for signals. As for now, do you playing games like that? Let's see the reaction here. I expect a sell. So what I'm going to do is wait for confirmation of an engulfing and see how market can down from there. From this whole box. Okay, I think there are no questions. I have to get a trading man. Good evening. Good evening. You know, yes, so I have a question. If maybe depending on let me take time to put it together regarding maybe tariffs. So after how long should I expect like a direct market movement towards what you are saying? Okay, now one thing that we have known for the past few weeks is we don't know when Trump talks about tariffs. You know, we just see the tweet, boom, uh, tariffs maybe have increased on China or something. So we can't make the exact time it's talking. So most times, if it's a tariff increment, it means we look at buying GBPUSD. You get, but it's the tariff is going to disrupt trading. But if it's an agreement like a tariff agreement or a reduction in tariffs, from a specific country, let me say the European Union, there we know the dollar may gain strength because trade is going to be accepted. Like people are going to want to trade more because of the news. And that's why you see, let me show you. And that's why you see, so I'll add the S&P 500 and the US 100, which is NAS, okay, NAS 100. Then also US 30, which is the Dow Jones. The Dow Jones had one of the best pumps last week. Pumps, it had one of the best pumps last week. I think I used to trade. This was one of the best pumps last week. And also this was one of the hardest dumps in history. So most times when Trump adds a tariff on China or something, this thing is likely to dump, you know, because of the trade. This thing represents it's a basket of uh, companies in the US, you know. So you can see that this one, I expect it to continue rising because of what's going on currently. You can even see how it respected structure. That's the advantage of trading it. So when Trump news is negative, when he's adding tariffs, most times these things they start dumping. So you can immediately rush and take the trade. Actually, this look the same. You can immediately rush and take the trade. It's very okay. Like for example, when Trump said this is the best time to buy, guy said he's an insider, right? And nearly the next day after I said that, we had the market rally. And he said, I used to trade this thing. Look at this. I used to enjoy trade. This is the harmonic pattern. I took a trade here and boom. Imagine I had held up to that. Crazy. Sharp boy went out. So currently it's situated at a psychological level. It's likely to dump again because I'm saying it tried to respect a harmonic pattern here. And that didn't happen. It dumped. And this looks like the resistance points and also Fibonacci area. So likely seeing it dumping again. So what you like to do is immediately talks, just go and do what you're doing, you know. But we can't know when it's talking. Sorry, it's just some random tweet. Yeah.
Okay. Well, the other thing I heard as well now, how does it basically also affect like the crypto market too?
I remember crypto is an asset, you know. Crypto is an asset. So it's investors' sentiment. It just burns investors' sentiment. Currently, it's reported that the biggest crypto usage is in the US. So Trump is a pro-crypto president, you know. Um, yesterday, yesterday he said the Trump government said that the revenue from tariffs may be used to buy Bitcoin. So if he comes out and confirms that, the news can pump, you know, because Bitcoin it's the area of the news. But if the all markets are crashing, it's because of tariffs and there is low money flow. You get crypto is likely to also follow that same narrative. It's like gold. Gold, the reason why people rush into gold is because they see it as a safe haven currently. Because of course we still have many people still using gold as a backing. Bitcoin would be the same, but it has not yet reached that point, you know. So that's it. That's it. That's it. I think that's it, guys. See.